Hello, this is the first recording of what's going to be a weekly recap and this week in review of the banking industry that I will provide, publish on my website, another YouTube channel, website, Facebook page, etc. I'll provide this on a weekly basis. It'll be a recap of what happened in the banking industry this previous week. This is Sunday, August 11th. So the preceding 5 business days, I'll talk about that and what happened in the banking industry from a market perspective, but as well as a regulatory perspective. So we'll talk about the business cycle, where we're at there. We'll talk about the different financial sectors in our economy. We'll talk about the banking industry in general from a market perspective, and we'll talk about interest rates. And we'll do that every week. So I'll recap it. I just also want to let you know a little plug for my website, CJL Quantum Analytics LLC, at cjlquantumanalytics.com, that you will find, besides this weekly commentary, week in review, you will also find premium products such as our quarterly newsletter, economic newsletter that was written from the perspective of banking. So if you're a banker, a bank investor, bank financial manager like I was for years, or a mutual fund manager and invest in banks, it'll provide you an opportunity to see what's going on in the economy for the last quarter and what the trends are and how that affects banking. For example, like if rates are going up, it'll help out with the loan portfolios and the net interest margin for the bank. Okay. So that's one of the products. The other products are going to be bank research reports that will comment and discuss what's happening at the money center banks, in particular, in regards to the risks of operations, whether it's what are capital trends, what are asset quality trends in earnings, liquidity, and rate sensitivity. All right, and that will be evaluated. We'll look at the numbers, and I might not necessarily tell you if it's good or bad, but I'll try. I'll do my best without being that direct. But I'll give you what the data says, and then from the data, you can decide for yourself if you think that's good or bad. All right, I might give you some hints, and then I'll also provide a risk-adjusted return. So we'll look at what the return on assets and equity is for these banks, and we'll adjust it for risk based on the risk in their operations. Then we'll also look at, last but not least, I'll provide a estimated finance value of the stock. So I just want to say this is going to be different than a market valuation. So a market is a equilibrium of supply versus demand. I'm not talking about that. I'm talking about finance theory. What are the cash flows worth of that business, and then value the business based on its earnings and balance sheet. So that's what I'm talking about. Okay, and I'll give that out, an estimate of value as well in these reports. Again, these are business. I'm trying to make a living here, so I am charging for those valuable services. And then also we'll charge for my, which I'll bring out monthly. I'll look at what are some potential take over targets. We know ever since I was a banker in 1989 that the banking industry has been consolidating, and so that's the trend. Okay, we have more banks in America than any other country, and so it's hard for those regulators. They got a tough job, and so they want to be able to control banks better. And so, I'm sure the grand design of things are that they do want to see a consolidation in the banking industry. All right, now, the last statistic I heard, 80% of deposits are held by the money center banks. All right, and the rest of us out here, regional banks and community banks, we're fighting over the rest of it. So it's a competitive industry, and it's tough for a community bank to make it, but you can do it. I mean, just you make your money by the net interest margin and what you charge on loans versus what in your bond portfolio versus what you pay out in deposits and what you pay, if you leverage up the balance sheet to increase your return on equity. So, but there's there's some traits there. You don't want to have too much leverage, right? Not be able to pay the money back. So, so that's what's going on there. So the money center banks have a little bit easier because their earnings are more diversified. They got, they get the way the bank makes a living that the smaller banks do. But then they also, which is that part. But then they also have fees that they charge. Traditionally, the bigger banks are half their earnings are from yield of assets minus the cost of funds. But then they have half the other half of the side of their earnings be for fees. The money center banks, since the disappearance of Wall Street back in 2008, when we had the liquidity crisis and the bond market fell apart, they now provide that side of the business for earnings. So a money center bank is more diversified, so it includes also the money made from investment banking operations, which traditionally have been focused on natural public offerings, but also merger activity, merger and acquisitions. So that's how they make their money. You can decide for yourself how much are they doing a good job? Do they deserve to be paid what they get paid? Who knows? That's up to the market to decide, right? So same with the rest of us. Okay, so every week I'm going to talk about like a recap of the market, what's going on for banking. So we talked about the business cycle. It's a late cycle. So we're not earnings growth, but our economy, gross domestic product is decelerating at a decelerating pace. And I think the last quarter was at 2.8% annualized. So we'll see what happens in the third quarter. I believe we're slowing down. I think that's what's going on. And I think that's why the Fed hasn't made any drastic moves, because the economy is slowing down like they want. So, but yet it's still at a slow pace. So it's like they're not worried about a recession kicking us. That's why I think that's why they're slow to reduce rates right now, because things are working the way they're probably slowing down. So we're trying to stop inflation, right? Trying to reduce that. That's what's going on. Okay, so that's where we're at, and then the rest of the world's at different parts of that business cycle. They have in their own domestic market. Our economy is the largest in the world, 22 trillion. China's about 10 trillion. So then we have other European countries that are have a good GDP and that we compete with, right? Economic development. We already talked about I'll talk about it again. The sectors in the economy that most are toward the top on the 52-week price range. Get that out. Okay, so as I mentioned, most of the sectors are in the close to the 52-week high. Energy, gold, um, or discretionary are closer to the kind of the middle or slightly right of the range, middle of the range. Same with technology and telecommunications. The finance industry is financial sector is closer to the high. As we saw, our bank prices were high about 2 weeks ago, and then they came down last week with the scare, I guess the recessionary scare, who started that, but they're trying to, I think, shake the tree limbs and see what falls out. I think most people don't know how to value. Most people that invest don't know how to value something when it comes to stocks, and therefore they just look to the market to lead them. And that's why I think you have people that know what's going on and sometimes affect the market or influence the market, and just to see if they can get stocks cheaper. So, okay. Right now, looks like energy. You know, during a recession or to build up to a recession, they say buy like food stocks, utility stocks, things of that nature. These are things that people are going to spend money on, whether the economy is good or bad. So those are some things to think about at the time. I personally think bank stocks are always a good time, especially when you can get one at a lower price, at a bargain price, bargain valuation. They, when rates are kind of going down like they are right now, traditionally banks do well when rates rise because they're able to charge more on the asset side, on the yield, and they're slow to increase the cost of funds, deposit rates. So when rates go down, though, that can adversely affect the bank's earnings, especially if they haven't put in some floors or whatever on their loan yields, loan notes. You got to build in those floors so that if rates do go down, that you protect your net interest margin. So hopefully they're doing that. And then, but also with rates drop, that has, but on the opposite perspective, when rates drop, that affects discount rates, which affects the valuations of banks in a positive way. Because if rates go down, then my discount factor is less on how I value earnings and also balance sheet. So, in particular, rates, so when rates go up, it's good for earnings because it reduces the yield on assets, but at the same time, it also raises the discount rate, which has an adverse effect. So it's kind of a balancing act. All right. So what else? So that's what's going on in the banking industry from a market perspective. Rates, I believe the yield curve is coming down. It's still inverted. It's been that way for 2 years. Inverted, but I believe the rates are coming down. The implied yield curve, when I calculated it last week when I put together my calculator there, the projection was that rates would come down, and so the spread between the low short-term rates and long-term rates was narrow, and the yield inversion is still there, but it'll grow more narrow. All right. So that's pretty much it for the market. Now, as for the regulations, I guess the big thing right now is about this Basel III, and that the big banks are pushing back on that. They don't want to have to increase their capital requirements. Most banks have regulatory capital that they need to maintain. Okay, and that's the base. But then the bigger banks have to have additional layers of capital reserves that they've got to account for. And it's all based on their perceived risk and what's going on with operations. And so that's what's happening right now. The Basel III is asking for the banks in America to raise their, well, all banks actually worldwide to raise their capital requirements. But the big banks here are saying, well, wait a minute, enough is enough. And we think our capital levels are fine the way they are. So maybe we'll hear something from that. Who knows? Maybe after Jackson Hole, who knows? We'll see what to decide to do. And so I think that's it for our first go around here. I'm gonna be doing these weekly. I'm gonna see if I can get some guest speakers to join us at times and to give their input, to make their contribution to what's going on here. So look for my weekly, this week in review, last week in review, whatever you want to call it. Look for that recap to come out and published on Sunday evenings. And I'll have it on my website, also on my YouTube channel and Facebook page. So this is CJL Quantum Analytics, LLC. And I'm Cliff Leiker. I look forward to, working with you in the future, providing as much feedback as I can. And check out my website, see what you think. Try out that economic newsletter, see if it gives you valuable information that you can use in help managing the balance sheet or helping you to understand what's going on with banking and what affects them from a microeconomic level. And as well as that, if you're looking at buying a bank that's undervalued and you're a bank financial manager, you want to grow your bank, so you're looking at merger and acquisition activity, that would help with that too. So I'm also available if anybody needs me to do some consulting work with them, the bank financial managers or even the mutual fund guys. I'll work with you. We'll learn something about banking. I'm more than happy to work with you. And then and the same thing with the bank investors. If you need some guidance, I'm available. I do have my investment advisor license. I'm an investment advisor rep. And I'd be happy to work with you, help you design your bond, your stock portfolio. I also like to work with my clients with their retirement plans and help them set those up and set it up in a way that's going to be good for them. So give me a call. I've got my phone numbers on the website. Again, the website web address is cjlquantumanalytics.com. My phone number's there, and so is my email address. So God bless. Signing off right now. God bless, and I'll see you next week. Take care.